Hey everyone, welcome back to Crypto Insider, the channel where we break down everything happening in the XRP and crypto world so you never miss a beat. Today we've got a massive update for you, and I mean it when I say this is one of the most jam-packed videos we've put together in a while. We're going to dig into the latest XRP price action and whether that 87-cent level everyone keeps talking about is really still in our future. We'll also get into ETF volumes, what's happening with RLUSD, the infrastructure being built around XRP, and of course the big one, the OUSD open standard and how it possibly ties back to Ripple and XRP in ways that most people are completely missing. So grab a coffee, get comfortable because there is a lot to unpack here, and I don't want you to miss a single piece of it. Let's get right into the show and break it all down together, starting with where the overall market stands right now. Let's start with a quick look at the broader market so we all have the same baseline. Bitcoin is hovering above $61,000, which is still a key psychological zone for a lot of traders watching the charts. Ethereum continues to struggle, sitting around $1,700, while BNB is holding near $560. Solana is trading around $80, and XRP is sitting at 19 cents in this snapshot. The Fear and Greed Index is reading 22%, which tells you sentiment is still leaning fearful across the board. The Altcoin Season Index for Bitcoin is sitting at 47, which is a pretty neutral reading, honestly. On top of that, crypto ETF flows came in negative for June 30th, losing around $309 million. So money is still trickling out of the market in aggregate, even though prices seem to be holding fairly steady at these levels. It is one of those moments where the charts look calm on the surface, but underneath there is still some real uncertainty about which direction things break next. Now let's talk about what Cassie Trades has been saying, because she puts together some of the sharpest chart analysis out there, and if you are not already following her, you honestly should be. Her take right now is that XRP still needs one final low before this correction is truly done. She's pointing out that XRP is starting to get some momentum after bouncing off the $1 area, but in her view, that bounce is not yet enough to invalidate the 87-cent support zone. On the larger macro time frames, she's seeing bullish divergence forming, the kind you typically see near a major market pivot, and she says she is becoming increasingly excited about what could come next. The piece that is still missing, according to her, is confirmation on the smaller time frames. She believes there needs to be one more wave down so those bullish divergences can line up across multiple time frames at once, and she thinks 87 cents is the most likely spot for that final low to form. Cassie went on to say that this weekend could end up being one of the most important stretches of the entire correction. A final move down into support usually comes with a burst of volatility, but that kind of shakeout can also set the stage for a powerful reaction afterward. In the short term, she's watching the $9 level as the current support being tested, and personally, she thinks that level breaks before the correction is fully finished. Here's the encouraging part though, whether that final low ends up being $1.93 or all the way down at 87 cents, the bigger picture story stays the same. The market appears to be preparing for a major pivot toward new all-time highs. That's why so many people are excited to see XRP potentially turning the corner here. Looking at the chart, you can see the move going from around $1 up toward $15, and some are even eyeing targets as high as $1.10. The real question everyone wants answered is simple. Can XRP actually hang on to that kind of momentum once it gets going? On the longer term side of things, there's an interesting historical pattern worth mentioning. Looking back over the last 13 years, the amount of time it has taken XRP to move from one cycle high to the next has averaged somewhere between 3 and 5 years. That pattern lines up with some of the macro Fibonacci extension targets floating around, which point to price levels between $8, $13, and $27 sometime between 2028 and 2030. Now, I want to ask you directly, do you think these macro cycle patterns are going to play out the way the charts suggest? Or do you think mass adoption of crypto and blockchain technology could push prices even higher than that? I know some of you watching are probably thinking those targets are way too optimistic, and hey, nobody has a crystal ball here. That's the honest truth. I do want to stay hopeful about where XRP could realistically be over the next few years, but a lot of that really comes down to regulation and how quickly financial institutions actually adopt this technology at scale. If the Clarity Act gets passed and signed into law, that could be a genuine turning point for the entire industry. Let's shift over to Turner's take on price action since he shared a short clip laying out what he's watching right now. His focus is on identifying areas of macro opportunity, basically zones where the risk to reward setup looks favorable based on where we currently sit. He points out that XRP is down over 72% from its all-time high, and there's a zone of prior resistance from back in 2023 and 2024 sitting around the 70 to 90 cent range that is now worth watching closely. He's clear that sweeping into that low doesn't guarantee a bottom is in, but the point he's making is that anything below the $1 level is an area worth paying close attention to for a potential local bottom forming sometime in the next 3 to 6 months. Whether XRP treats $1 as the low or sweeps a bit lower first, the overall idea stays the same. This zone represents a macro area of opportunity rather than a guaranteed floor. And that distinction matters a lot for how people manage risk here. Most chart analysts seem to agree it could take a bit longer to fully work through this current phase of the market. Historically, activity tends to pick back up toward the end of the year, and people have often pointed to September or October as key months to watch. I know that might feel like it's forever away, but really what happens over the next 2 or 3 months is going to set the tone for whether prices head higher or lower from here. It genuinely only takes one bad news day to send crypto lower across the board, and if XRP breaks below that $1 mark, you could see some panic selling kick in from certain traders. Some people are psychologically wired to believe that if an asset falls under $1, they need to sell and get out immediately, even if that reaction doesn't fully make logical sense to you or me. So it's worth staying prepared for anything, whether that's a random headline, a liquidity event, or just an unexpected swing nobody saw coming. Personally, dips like this have been an opportunity to keep accumulating more, and if prices go lower, that approach isn't going to change anytime soon. Now let's get into the ETF side of things because there's some useful detail here. XRP spot ETFs recorded their second net outflow in over a week on July 1st, with about $1.86 million leaving in total, breaking what had been a pretty steady run of inflows. But when you look closer, the flows were actually mixed rather than uniformly negative. Franklin Templeton's XRP product actually added roughly $2.88 million, bringing its total up to around $413 million, while Bitwise saw an outflow of about $4.75 million, leaving its total near $495 million. If you zoom out and look at the last few months as a whole, there have only been a handful of outflow days compared to a much larger number of inflow days, with a few days landing pretty close to flat. And compared to the rest of the market, XRP is actually holding up impressively well. Bitcoin lost $1.4 billion in outflows, Ethereum lost $257 million, Solana shed around $800,000, yet XRP posted a positive $20 million for the week, which really stands out against that backdrop. Now let's get into the story everyone has been talking about, the OUSD announcement from Jay Nisbet, which absolutely blew up online and has already pulled in around 148,000 views on that single post. If you missed our earlier coverage of this, OUSD is a brand new stablecoin initiative, and it's being described as the biggest launch of its kind in history. The list of names involved is honestly staggering. BNY, BlackRock, and Ripple are all connected to this in some way, alongside massive players like Visa, Stripe, MasterCard, American Express, Discover, Standard Chartered, and Commonwealth Bank of Australia. Several major Japanese banks are involved too, along with DBS, ABS-A Bank, and a long list of companies that already have existing relationships with Ripple. On top of that, you've got Google, Samsung, IBM, Shopify, Rakuten Group, Coinbase, and Tempo all tied into this coalition as well. Once you actually sit down and look at the full list of participants, it becomes pretty clear just how significant this initiative really is. And that's exactly why people started digging deeper into what it could mean for Ripple and XRP specifically. Here's where things get really interesting. OUSD stands for Open Standard, and it turns out Open Standard was actually the original name of Ripple before the company became what we know today as Ripple. And interestingly enough, Standard Chartered is also the name tied to the Ripple subsidiary that operates as the trust issuing RLUSD, with BNY Mellon serving as the custodian. So when people noticed the name overlaps, naturally the theories started flying, and honestly, most people don't believe these kinds of naming coincidences happen completely by accident. The theory going around is that this could be Ripple quietly pushing regulatory clarity across the finish line, aligning with major banks around a vision Ripple has apparently wanted for a long time. Under this theory, Ripple would be giving up some market share on RLUSD directly, while XRP works quietly in the background handling settlement, which ultimately still benefits Ripple in the long run. Some people have even floated the idea of Ripple eventually acquiring Circle down the road, combining stablecoin dominance with XRP price appreciation into one massive long-term play. Now, before anyone runs with that Circle acquisition idea too far, let's ground it in reality for a second. To actually acquire a company like Circle, you would realistically be looking at something in the range of $25 to $35 billion, and at XRP's current price level, Ripple's holdings simply don't get them there on their own. Ripple is estimated to hold somewhere around 4 to 5 billion XRP tokens, and at current prices, that puts their holdings value at roughly $4 to $5 billion as well, which is nowhere near enough to fund an acquisition of that size without outside financing or a major loan from a partner. So while the theory is fun to think about and it's not impossible if XRP's price moves dramatically higher over time, Ripple simply isn't in a financial position to make a move like that right now. Still, it doesn't take away from the bigger structural theory that people are building around OUSD, RLUSD, and how the XRP ledger fits into all of it going forward. Digging even deeper into this theory, some analysts describe RLUSD as a Trojan horse operating quietly underneath the surface of the broader financial system. The idea is that Japan's rollout of RLUSD on Ethereum right now is only temporary, and the liquidity being built up there is ultimately designed to migrate over to the XRP ledger, since XRP offers lower friction at scale for these kinds of settlement operations. Japan is being viewed almost like a proof of concept for this exact transition, and there's already talk of XRPL activity ramping up there before the end of the year. Under this framework, trust lines would essentially be managed at the custodial level for everyday users, meaning Ripple provides the custodial solution while still benefiting from both RLUSD adoption and XRP price appreciation at the same time. The overarching idea some people keep repeating is that the end goal has always been for most everyday users to interact with this system without ever even realizing XRP is involved in the background at all, which is a pretty wild thought when you really sit with it. Layering in the technical side, the XRP Ledger's multi-purpose tokens bring embedded compliance controls, metadata transfer restrictions, and supply caps directly into the protocol itself without requiring custom smart contracts or added complexity. That matters a lot for regulated institutions looking to tokenize stablecoins and real-world assets, since it gives them a smaller, more efficient ledger footprint to work with compared to more complicated alternatives. This kind of infrastructure is exactly what's needed to onboard a global population safely, starting with familiar digital dollars distributed through banks and payment networks people already trust, and eventually expanding into payments, tokenization, and yield products without a lot of the usual friction associated with crypto. On top of that, Ripple's broader business moat is already pretty formidable when you look at the full picture. Their G-Treasury platform already serves thousands of banks, their Hidden Road acquisition covers prime brokerage and derivatives, and RLUSD is positioned as the compliant on-ramp tying it all together. Banks tend to move toward whatever rails are cheapest and fastest for them, and that self-interest is exactly what could end up driving volume toward this ecosystem over time. Now let's clear up something important regarding the DTCC, since there's been a lot of confusion floating around in the XRP community about this. Some commentators were suggesting that the DTCC going live would cause XRP's price to skyrocket immediately, but if you actually look at what's happening, they are simply going live Monday through Friday during specific hours using the existing traditional financial rails, not blockchain rails at this stage. When the DTCC surveyed institutions about their expected usage of this new system, the projections came back showing somewhere between 1 and 10% of the total float being used through it, so this is not some overnight flood of money moving onto blockchain rails. It's also worth noting that Canton is expected to go live around July 13th, 15th, which is a separate development entirely. So while it's exciting to speculate about what could happen, the responsible thing to do is stick to the facts, especially when tens of thousands of people are tuning in and trusting the information being shared with them here on this channel. Now let's wrap things up with some real-world adoption news, because this part is genuinely exciting. Ripple recently activated real-time blockchain payments between Thailand and Japan, two major economies with a combined GDP of over $5 trillion and hundreds of billions of dollars in annual trade between them. Having faster, cheaper, borderless settlement running on XRP for that kind of trade corridor is a meaningful example of real-world adoption actually happening right now, not just theory. On top of that, RLUSD has now grown past $900 million on the XRP Ledger, with roughly 55% of all RLUSD supply currently issued there compared to Ethereum's share. That growth path is wild when you consider it started around $20 million back at the end of 2024, meaning we're talking about growth of more than 4,000% in about 18 months. Ripple continues holding licenses across the EU, Japan, Africa, South America, Mexico, and the United States, more than almost any other blockchain company out there, and that global groundwork is exactly why so many people are watching closely to see where all of this heads next. Thanks so much for watching, and I will catch you in the next one.